Okay, welcome. We'll start our lesson. Today lesson will go through our LO2 learning outcome 2. Good evening, everyone. And if you have any question, please feel free to drop me email on my email address. Today lesson is be able to use control account. So we'll discuss what is meant by control account, how we can use control account for reporting purposes, and I'll discuss with you a few control accounts. So today lesson is key inductive content, what we're supposed to be learn under this learning outcome. Control account, purpose and the function of control account, subsidiary account, journal, sale return, purchase return we can, and we will go through preparation of control account, how this helps, contra bank reconciliation and reconciliation account, how we can prepare. That's all our discussion will be focused. Before starting today's lesson, let's recap what we learned during last lesson. Okay, anything you remember from lesson 1, please? Recap last lesson, yesterday what we learned. Hello, can you hear me?
Yes, but I forget really.
You remember? We discussed about assets.
Oh, yes.
Okay. That's the recalling.
Kind.
What is meant by assets?
What we own?
Yes, what we own is our asset. Yes, what we own. What own is or we own. What we own is our asset. But if the things we own will flow economics benefit, yes? Because maybe we own chairs, broken chairs, that we cannot cluster as asset anymore. Huh? Maybe we have a broken chair, that's not, we can't use it, it's a scrap, even if costing us. Yes? So we own it, but also give us some business or some benefit. Yes? So we call asset. If you have a knowledge, if you have a skill, if you have expertise, that's your asset. We discussed any example of assets. Yesterday we discussed.
What? Example.
Yes. Which example?
Example.
Yes.
One second. For example, car or.
Okay. Good. Well done. Cars. Car is our asset. Yes. What else? Car. House.
House.
Which we call building plants. Yes.
Yes.
Cash. Yes. Your mobile phone. Yes.
Yes.
Your asset. What else? These are all our assets. So we discussed 2 types of asset. We can categorize them: non-current asset. Yes. Asset which we can use more than a year, like plant. Yes. Machinery. We discussed then tangible asset. Under this, tangible is the asset which we can see. Do we know any tangible? Buildings, yes?
Yes.
Or anything which have a physical substance, mean have some bodies or structure, or yes, we can see it is a tangible asset. What is the intangible, please? Intangible, we can't see it, but still asset.
Okay.
Like reputation, yes? Your reputation, your goodwill, yes? Your honesty, your sincerity is all your asset, yes? In the company point of view, we can say goodwill, yes? Or we call goodwill. Okay, this is all about our asset, and this is intangible. We can't see it, but still we can say is a value to business.
Okay.
Okay, then we discuss about current asset. We can say inventory, also known as stock, yes?
Yes.
We learn about cash, we said prepaid, and we also discussed yesterday lesson about depreciation. Do we remember what is meant by depreciation?
Mm-mm.
Depreciation. Depreciation means reducing the value of the asset, reducing the value of
Mm-hmm.
asset. Yes? So that's a depreciation. So like if you bought something £100, maybe it's £90 left now. So £10
Ah,
depreciation.
okay, okay.
We discussed two methods to calculate the depreciation. One we said straight line. Yes, 10% every year. That's straight. Or reducing. Reducing,
Mm.
if I have £100 first year, 10% on 100, if it's a straight line, will be £10. So every year I'll carry on £10, £10, £10 value go down. If I'm reducing, I'll say 100 minus my 10 previous year. I have a £90 now. So on £90 I'll do 10%. Okay.
Okay.
So this is called reducing. Now will be £9. Yes. So this is reducing balance method we discussed. So that's we learned during our last lesson. Okay.
Mm-hmm.
So we'll move to the today lesson. Today lesson we have a 3 assessment criteria. Explain purpose and the function of control. Prepare. We can prepare our control account and we can reconcile. So that's another key 3 things we need to go. Okay.
Okay.
So first thing I have included bank reconciliation. Reconciliation means your cash balance and the bank balance. In my record, I'm saying £100 in the bank deposit. Yes,
Mm-hmm.
actually bank is different. So we can reconcile because sometime we gave check to somebody, they not presented their check. They gave us check, we not deposit. We said in the book, cash book, we have a cash, but actually in the bank we don't have a. Yes, so thus we can balance it. This is called bank reconciliation. We can reconcile through control accounts, which we'll go through some. Okay, like here, my record is a bank, is a cash. Yes, I match when I'll get the bank statement, I compare it. Yes, so
Mm-hmm.
balance as bank statement, I write how much is closing balance and balance my cash book. It should be matched. If not matching, there is a time difference. Yes. So
Okay.
we say how much, why not? Yes. And at the end, my cash book balance and the bank book balance should be equal. Any question?
No.
This is called bank reconciliation. Like here, if we look here, this is my cash book. Yes. Okay. I have how much balance I have? I have a debit side. I have a credit side. This is my debit side cash book. This is my credit side. I'm saying my net balance is £207 in my bank. Yes, this should be in a bank.
Mm-hmm.
So on the 6th, I deposit the cash. On the 13th, I received the check from Jill. Then on 31st, Hempty gave me the check. So that's my debit side and that's my credit side. Yes, I make the payment to separate, to fit, spider. Yes, so I minus my this side. I have a 281. If I'll minus from this side what make I made the payment, so my balance should be in my bank account £207. Yes,
Okay.
so I'll compare with bank. Okay, this is my bank statement. My bank balance says how much money out from the bank, how much money in from the bank. Yes, so my bank statement says 150. I receive a cash 75. If we see in the cash book 75, yes, I deposit. In the bank we'll see 75, yes.
Mm-hmm.
Is it match? Yes.
Yes.
Then we look the next entry. Then 17 pound check I receive and deposit into the bank. I'll see, do we have a 17 pound? Yes. Yes.
Mm-hmm.
Then I look again in the cash book. I have a 39 pound check which I received and deposit. There is a no 39 pound. Yes. In the bank,
Mm-hmm.
not deposit. So I should include here now 39. Yes. The check which not presented in check not deposit into the bank. Then I look the payment side, 30 pound. Yes, I make the payment in the bank. If I look in the bank, 30 pound being paid out from the bank. Yes. Then I look there, 15 pound from the bank statement. Yes, 15 pound paid out. Yes.
Yes. Okay.
Then I look 29 pound I paid to Spider in the bank statement. If I look, yes, it's been paid off. Yes.
Mm-hmm.
So bank charge me 10 pound charges. I wasn't aware of bank charge me 10 pound charges for the service they provide. In my cash book I don't have, so I should include this side 10 pound. I reduce my cash book balance. Yes. You know, sometimes bank charge you for the services, so the bank statement shows, my record don't show. Huh? Cash book is a my record and a bank record, it should be matched. Huh? So that's the way we can match it. If we look here now, what we done, we match it now. So
Mm-hmm.
bank balance was 150, yes.
Yes.
75, these all the balances we have. First we balance the cash book, this 16 pound bill credit, yes. If we look in the bank statement, 16 pound, can we see here? Yes, in the bank statement, 16 pound bank credit, but I didn't record in my cash book. So I'm doing first cash book balance, okay? So we see now my 16 pound cash balance went up. And if I look the bank charges, 10 pound, that wasn't record. No, my balance, new balance in the cash book, 213 pound. Any question?
No, it's clear.
My bank balance and my cash book balance should be equal afterwards. Huh?
Yes, yes, I know.
Okay, that's the way we need. Okay,
Mm-hmm.
next we're looking control account. A control account is the total amount. Control account contains the summary of total of all individual transactions. Transaction mean I bought furniture, I bought this, yes? One debit, one credit, one debit, one credit. So one of lesson I mentioned you debt click, yes? What goes on debit, what goes on credit. So purchase ledger control account, it shows my trade receivables. Purchase ledger control, it shows how much I bought or purchases on credit. I have to pay. I have to receive, I have to pay. VAT control, it shows how much VAT I have to pay to HMRC, tax office. So purchase ledger, we do debit, and the sales we do credit, and the VAT we do credit. Any question?
No.
If I'll purchase 100 pound worth of goods, 100 pound is purchased, 20 pound I paid the tax on it, and I have to pay how much? 120. So that's my debit, that's my credit. It should be equal. Okay?
Okay.
So that's we use the debit and credit rule. Okay, you will see here the sale invoices process. We do debit and credit, individual invoices, sale day book, and individual receipts we do. And the journal ledgers, it shows the sale ledger control, how much we have received and paid. Any question in this one?
1 second. No, it's clear.
Okay, next. This is my control account.
Mm-hmm.
Is my sale ledger. It shows Mr. A, I sold good, I sold to Mr. B and Mr. C, yes? I send them invoice, how much sales I made, yes, how much was the VAT, and when I receive check, I can match it, yes, my sales. So this is, I can make the control, yes, where the money come from, where the money gone, yes, why. Any question?
Sorry?
Any question?
No.
Okay, then next we're looking the VAT control. VAT have two types, input VAT. Input VAT, VAT is called value added tax. Value added tax. In other country we call journal sale tax. Yes, various country those charge the tax. So
Okay.
if we'll purchase something and I'll pay tax, if I'm registered for tax, I can get refund. If I pay £20 tax, I can get back. If I'll sell goods, that's called output tax. Sales is my output. On the sales, output tax, let's say, is £40 I receive from the customer. So 20 I can get back, 40. So net is 40 minus 20, 20 I still need to pay to HMRC. Yes?
Okay.
So that's the way we can prepare the control account, which is called VAT control. So here is an example of VAT control I can give you. We'll say control. I did sales and people return their goods back to me. Yes? The VAT was 500. That's my debit side. Return goes on the, okay. I think so we discussed about debt. You remember we discussed click, yes, debit and credit rule, one of lesson.
Yes.
D is a debit, E is expense, A is assets, and D is a drawing, yes. Then we said click, what represent click? The word click is shows C is a credit.
Income.
Excellent, well done. I is the income.
Liability.
Excellent, well done. Liabilities. Capital, yes.
No, yes.
So whichever side that click will goes, the VAT will goes on the same side, yes. Sale goes which side? Credit side, and the VAT on sale will goes on the credit side. Cash sales, credit side. Purchase is debit because purchase is, when I return it, it goes on the credit side. Opposite debit is a credit. Discount received is the income and the VAT on it is goes credit side. So I added my debit side total, I did the credit side total. So there is a difference, £1,500. That's if my debit side is a higher and credit side is a lower, it means I have a refund from HMRC. If my credit side is higher and debit side is a lower, then it's mean I have to pay HMRC. So in this case, I have to pay HMRC £1,500 because my refund is less and the tax I calculate from the customer is more, so I have to pay to HMRC. Any question?
No.
Okay, then we have these are the sale ledger control accounts where the balance previous, if we do credit sales, I have a receivable, and then we can do debit and credit. These are all control accounts. Then control accounts, which we can prepare the purchases, and the purchase control account, we can say how much money I have to pay, how much money I have to receive end of the period.
Okay.
We can balance in them and we can look around how much owe, how much we need to pay. As mentioned, VAT. Okay, so we'll see here. Next, we looking journal. Journal is called book of prime entry, where we record the transaction debit and credit in the journal. Like here, this is the journal. Irrecoverable. Irrecoverable means bad debts. We're not going to recover the money. Is £100, yes, which is expense for business. There is a £20, we're not going to get it. I supposed to receive overall total £120. So I did my debit entry, I did my credit entry. Any question? And this is also linked in the sale ledger control. So sale ledger control account will go down by 120. Any
Okay.
Okay, normally when we prepare the ledger, we put their name, their amount, which side will go, debit and credit. Huh?
Yeah.
The principles we have. Then next we're looking payroll. What is a payroll? Salaries, yes? We can make
Yes.
it payroll control accounts as well. Okay? We can see how much money we need to pay in salaries to our workers. Okay? Okay. As we look here, this example, can we read? Gross wage. Gross wage mean what is my total wage before tax? 17,200. Yes? Wish to be a month. Okay. Then employer NI. NI is the national insurance contribution in UK. Yes. Then implies. So employer also pays who employed you, and employees also pays. Then if you're a union member, you pay union fees. Then tax on 17,300. We have a 3,000 is a tax there. Yes.
Okay.
So what my net salary will be? So 17,200. I'll minus my 33,000. That makes 14,200. I also minus my NI, which is 1,640 pounds, and then I'll also minus trade union. Whatever will be left, that will be my net salary. Okay. Then this NI, employer and employees both, and the tax which goes to HMRC, which is a tax office. Any question?
No.
Okay, next. And sometimes when we record these journals, we can make errors, yes? So sometimes we record, I supposed to be record 1,000, maybe I put it 10,000, yes? So this is called error of original entry. I made original entry wrong. Error of reversal is the correct amount entered, but debit and credit side is wrong. Yes, I put it other way around. Error of omission is mean I missed something. Error of principal, expense goes on the debit side, asset goes debit side as per that click. So I put it other way around. So that's the error of principal. I'm wrong. Error of commission, maybe I supposed to say telephone bill, but I said electricity bills. Yes, I write the wrong name of expense. Compensating, one side you put more, other side you put more, that will compensate you. Yes, your books can be balanced. Okay. So this is okay. Then we have we discuss errors. Yes. So some errors we can trace within the balance trial balance, and some we can't. Yes. So if it's a one-sided, we if it's a two-sided, we can't. Okay. Suspense account is a temporary account. We can prepare and we can make adjustment in the book of accounts. Any question?
Can you explain to me the suspense account?
Suspense is mean temporary, like you did the credit side right, yes, but you didn't put anything on the debit side. No, you need to do double entry. So you can prepare, you can say this is my suspense account, yes, to balance your figures. Huh?
Okay.
So if we look here, discount allowed, let's say here, trade prepared trial balance for the event, and they found debit side is this amount, and he discovered the following error. Discount allowed was 486, was entered discount allowed as 684, yes?
Mm-hmm.
And in the sale ledger control account was the correct. So what we do now, I do the reverse of this, yes? If you take the difference, yes?
Okay.
Discount allowed, I'll do credit, but I'll do the suspense account debit with the difference. Like here you see, I did £198 was the difference. And the 198 I'll do in the discount ledgers. So that will be, but this sale ledger control account was correct, so I don't need to touch the correct one. Yes, incorrect, I can make double entry to make the rectification through suspense account. Okay, does it make sense?
Yes, yes,
So that's why it's a suspense account. Okay, then we have explanation behind the journal. When we'll prepare, we look the debit and credit entries, yes, each, and we can reconcile our journals. Any question on this? We do double entries.
Mm-hmm. No.
Okay, then this is normally when we do the journal, like you bought a motor vehicle, what your goes debit, what goes credit. So all is been explanation how we can treat the double entries. From double
Okay.
entries, we can make our ledgers, like is a sale ledgers and purchase ledgers, and from these, then we can make it our each ledger account, bank, capital, non-current asset. You will see, and whatever, that's my debit side, that's my credit side. 10 minus 4, it will be my net balance, 6,000. So when I'll prepare my trial balance, my 6,000 will go on the debit side because my debit side is higher. Okay.
Okay.
Capital is 10,000. When I'll make trial balance, my capital goes on the credit side, 10,000. When I'll prepare non-current asset, because I have only debit side, it goes in the debit side in the trial balance. Okay. So that's the way
Okay.
we balance all. And exactly the same in the cash and all others, and everything will be goes. And then of course we can prepare the accounting equation: asset equal liabilities equal capital. Asset minus liability is equal to capital, which we learn in one of lesson. Any question?
No.
Okay. Next we have a sale ledgers is being individual ledgers control account. How much money I supposed to be received? I sold £10,000 worth of the goods. I received it 8,000. My outstanding is 2,000. I
Mm-hmm.
have to receive. So balance carry down is this side. In the next period, balance brought down comes opposite side. Okay, always.
Okay. Okay.
This is my trial balance. You will see, yes, my debit side and my credit side should be equal. That's a trial balance.
Yes, yes, I know about it.
Okay, if I'll ask you, capital goes which side?
Credit.
Excellent. Cash at bank?
Debit.
Excellent. Furniture, which side?
Mm.
Furniture is a
Debit.
debit. Good. Purchase ledger control, which side? With those
Uh,
creditors.
Debit.
No, creditor, liability.
Oh, yes, yes, I'm about it. Okay.
Credit side, yes. We need to pay to HMRC tax, yes. It's a liability credit side, yes.
Mm-hmm.
What is a sale? If you
Uh,
if you mix up, always write the word debt and write the word click and then think about, yes.
okay.
Sales is the income. Income goes which side?
Income, credit.
Credit, good. Well done. Purchases is expense, which side? Debit side.
Debit.
Yes. Any other expense or any other ledgers if we make and we make adjustment here, and then our debit and credit should be equal.
Okay. Okay.
So that's the way we deal on trial balance. Well done. You did well. You will see here. Yes. We did the total all. So that will be balanced. Okay. I copied the link for you if you want to do practice double entry bookkeeping. Yes. Will help you. I copied the link to look around double entry. Yes. Equation.
All right.
That's also help you if you want to learn more double entries. I copied here if you want to look around the financial statement of companies, how they end up all the accounts from all these ledgers into final accounts, and the link for further reading.
Okay.
So guys, today lesson we discuss about let's quick recap what we learned. We discuss about control accounts. Yes, we really focus key control accounts is sales ledger control account, which is also known as trade receivable, and also we called debtors. Yes. Why we have these are our credit customer. I have to receive money from them. Yes. If we have a credit sale, then we discuss about purchase ledger control account. Yes. This is our trade payable. Yes. This is also known as creditors. And these are our credit supplier because we bought credit. And this is linked with the purchases. Okay. Then we discuss VAT. VAT can be input VAT, which is on expensive goes or asset goes on the debit side. VAT on sales will go on the credit side. We learn according to that clip. Yes. That was the key, and all these control accounts, and then control account will reconcile into trial balance. Yes. Where we reconcile them into trial balance. So that was today's lesson. We learn about how we can prepare the control account, how we can reconcile into the trial balance. We discuss about debit and credit, and we learn about double entry. So one of control account we can prepare when it's come assignment. So we'll prepare like one control account, one purchase, one sales, or one VAT control. Yes. And meet our criteria which we're supposed to be learned. And suspense we discussed. Suspense is always temporary account. If we have one side correct, other side you did in the previous quarter wrong, you make the suspense account and you can rid off transactions. So, and to balance our book of account. So that's all today lesson, and the next lesson we'll go through our LO3 and the learning outcome 3, and that's 3 learning outcome each unit. And hope so speak you all our next lesson. And in the meanwhile, if you have any question, please feel free to drop me email, and I'll try my best to get back to you as soon as possible. Thanks for listening and attending, and hope so speak you all during our next lesson. Thank you. Bye-bye.